Welcome back, investors, to Ticker Time News. I'm Adam, and to end the month of March and the first quarter of the year, the S&P 500 fell 1.6%. And boy, oh boy, did it fall hard. And on no specific move. Look at the 5-minute chart for the S&P 500. All day, we were kind of in a decline for most of the day. We kind of teeter-tottered right around on the S&P 500, the 45.90 to 45.80. A nice area that was resistance that turned into support, really teeter-tottered around it. But then right here in the last hour, it just sank. And again, no specific news for doing this besides just the mechanics of the market, with the first quarter ending and the month ending also both on the same day. The Nasdaq dropped 1.5%. The Dow Jones tumbled 1.6%. And the Russell 2000 fared the best. It only slipped 1% to wrap up the market's worst quarter in 2 years, as investors continue to juggle war, inflation, and rising rates. But my thesis on the market still remains intact, at least for now, that is. Look at the chart here with me. This line right here, this purple line, this is sitting right about 44.75. And that's an area that after our snapback rally occurred, after the death cross here, the all feared death cross, we bounced back to that area. And recall, on March the 23rd, we had a sell-off on that day. After we snapped back to the death cross where it crossed over at, that's that point, that purple line. We bounced around that area. It wouldn't surprise me if we actually came back down to this 44.75 to retest it and then bounce off of that, okay? That would not be a surprise to me. Like I said a few days ago, when we broke above resistance and just gapped up above it, I put a new target of a new all-time high for the S&P 500. My thesis still says we will get there. It's just not going to be in a straight shot like it was going back to March the 14th all the way up to March the 29th. We're not going to have a straight up rally like that to the new all-time high. It's going to be volatile. We're going to have red days and pullbacks, and we're going to bounce around, move sideways a little bit before we finally get to that all-time high. So my thesis still remains intact. I do believe we're getting there. And then once we get there, then I think watch out for bigger recession talk, or maybe, or just maybe, the Fed does a U-turn on rising rates. That's something to be cautious about, because if we're headed for a recession, what tools does the Fed have if they are tightening monetary policy, if they are raising rates? They don't really have any tools available. They need quantitative easing. They need money going into the market, not coming out. So they're in a very tough situation. And if they come out more dovish to protect from a recession, that would kick the market into high gear and definitely get us there much quicker. So my thesis is still intact, at least I believe. You come to your own conclusion and let me know in the comments what you think. Do you think the market we've reached a top, right? We've reached a local top and that's it for a while. We're not going to get back above what we did on March the 29th for the S&P 500. We're just going to move sideways. What do you think is going to happen? And this weak finish pushed all 11 S&P 500 sectors into the red to close, with financials down 2.3%, communication services down 2%. Those are the two that lost the most. Utilities was down 0.2%, and consumer staples down 0.4% were the sectors that I guess you could say outperformed on a relative basis with the smallest declines. Now, the session was influenced by even more profit-taking activity, just like yesterday, after a strong second half of the month of March. Quarter-end mechanics also took over, and of course, a 7% drop in oil prices to $100 a barrel after the White House laid out its plans to release 1 million barrels of oil per day for the next 6 months to help alleviate gas prices. OPEC Plus agreed to increase its output targets by 432,000 barrels per day in May, according to CNBC. Now, that's slightly more than the 400,000 barrels per day schedule for April. Inflation remained on the market's mind after PCE data for February rose in line with expectations, further crippling real personal disposable income, which decreased by 0.2% in February. On a year-over-year basis, the PCE price index was up 6.4%, while the core PCE price index, which excludes food and energy, was up 5.4%, the highest level since 1983. The Treasury market didn't react to the inflation data, perhaps because it wasn't surprising, or maybe because investors preferred to hide out in bonds amid the negative bias in equities ahead of the employment report that comes out tomorrow. And if that's negative, that's going to sink markets even further, maybe back down to that line that I talked about right here, this purple line here at 44.75. Well, it's a 1.24% drop, and we dropped 1.57% today. So yeah, we could get there tomorrow if that employment report came out and it was terrible. Now, the tight spreads continue to weigh on the financial sector for profitability reasons. The 2-year yield decreased 5 basis points to 2.28%, and the 10-year yield decreased 3 basis points to 2.33%. And the favorite of all, the CBOE volatility index, that increased 6.4% today too. Man, oh man. Well, here's where we stand year to date. The Dow Jones is down 4.6% year to date. The S&P 500 down 5% year to date. The Russell 2000 down 7.8% year to date, and the Nasdaq down 9.1% year to date. Okay, here's some stocks making some big news today. GameStop. First up, ticker symbol GME for GameStop. They will seek approval at its upcoming 2022 annual meeting for a 3.33-for-1 stock split for its Class A shares. This will increase the number of Class A shares to an even 1 billion if approved, and it looks like it will definitely be approved. This caused GameStop to pop 15.85% in the after hours. All right, GameStop has been on a run since its earnings, and specifically since March the 21st. GameStop ran all the way, let's get this right here, 150%. And let's see, how many days was this? In 8 days, it popped 150%. That is pretty fantastic for GameStop. All right, moving on from GameStop, we've got Walgreens Boots Alliance. Ticker symbol is WBA for Walgreens. They were down 5.6% during regular session, and they were up 0.6% in the after hours. Now, why did they fall nearly 5% if you subtract out after hours? Well, despite the Dow component, because they are in the Dow, and they beat their top and bottom line estimates on its earnings report, the stock still fell. Why, right? Maybe it's because of the turmoil with what's happening with maybe selling the Boots part of Walgreens Boots Alliance over in Europe, or not. EPS came in at $1.59 a share on estimates of $1.39 a share, which was a nice 14.29% beat. And they beat revenue too, $33.75 billion. They beat by $527 million, or 1.59%. So earnings came in real nice for the company. Now, one that took a bit of a plunge today, and not in a good way, UiPath, and ticker symbol is PATH, P-A-T-H. Now, when you look at this, it's bad. You thought S&P falling today was bad. Its fall was bad. Let's go to the 5-minute chart here and look at this gap down that it sustained here. Now, UiPath, it was down 25.65% during regular session. That's a big drop, and it was all at once, a big gap down. And then 0.88% in the after hours. Now, UiPath was the latest growth stock to take a plunge after providing disappointing guidance. Because if you look at their earnings here, look at their earnings. They came in at 5 cents on EPS per share, estimate 3 cents per share. That was up 2 cents per share, but 78.9%. And revenue of $289.6 million on estimates of 283. They beat by 6.65 million or 2.35% on revenue. But because their guidance was soft, then nope, that's it. It was over, and it took a huge plunge. Smash that like button, share this video, and beat the market with us by clicking the first link in the description. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.